Hey everyone, Couch Investor back to another video for today, and today we're going to talk about SoFi. There's been a lot of noise recently with regards to the company. We had some comments from the CEO, another comment from a Morgan Stanley analyst, and then of course this last week, so the Biden student loan forgiveness, how the White House is trying to cancel $39 billion in debt. Now, of course, many of you might think, oh, this is going to hurt SoFi. Now remember, SoFi right now relies much less on the student part. Throughout the last couple of years, it has grown its business towards various revenue streams. Now, although this $39 billion might seem big for some of you, just remember that this was the previous plan. So Biden's original plan, unveiled in August 2022, would have canceled up to $20,000 in student debt loans for people holding federal student loans. The president's legal rationale for the program was the Higher Education Relief Opportunities for Students Act of 2003. Now, the plan was to have been more broad and applied to all federal borrowers rather than certain groups of borrowers. It was estimated that the original plan would have eliminated an estimated $400 billion in student loan debt, so quite a big difference from the $39 billion that they announced last week. Of course, some people will be against it, some people will be for it. Those that have already repaid their debt might feel cheated as well because, well, they took out a loan, they did what they had to do, they had to repay it, so they did that, and now they see that some people are getting their debt forgiven, which, to be honest, isn't that fair, but hey, that's just the way things are right now. Now, with regards to SoFi, is it a bank? Is it a tech company? What's their growth rate? So remember, their full year non-GAAP guidance for 2023, they expect net revenue to grow between 27 to 31%, adjusted EBITDA of between $268 and $288 million, and adjusted EBITDA margin of 14%. Now they also say here that this guide assumes positive quarterly GAAP net income in Q4 2023 and a 20% incremental GAAP net income margin for the full year. Now, with previous headwinds becoming tailwinds and the momentum that SoFi is gaining right now, I obviously do think that they will beat on their own estimates, their own expectations yet again. Now, the CEO reiterated a couple of things last week and had something to say with regards to the Morgan Stanley analyst comment. So he says that they're still expecting 15 to 20% growth by Q4 for the tech segment of the business and will continue to accelerate from there. Of course, we're still waiting to see who that big whale customer is going to be. They're still expecting GAAP profitability by Q4. And with regards to the Morgan Stanley note, SoFi should be valued as a bank, not as a tech company. Well, he says that banks usually have 30% ROE, which is what SoFi is striving for, but they are trading at 4 times tangible book. Right now, SoFi is trading towards the 3 times, so quite a discount there. Do with that what you want. And for those that are interested, ARK Invest have bought for the ARK F fund more shares of SoFi last week, 424,638. Now, if you're enjoying this video so far, leave it a thumbs up, subscribe if you have not, would really appreciate that. We're trying to reach 30,000 subscribers by the end of the year, so thank you very much for all the support. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Now, a quick little overview of how the company is doing right now. We're up 5% today, so quite a nice day there. So year to date, we're up 106%. In the last 3 months, we're up 61%. Of course, there's a lot of expectations towards the next earnings report. Let's hope that does not disappoint. Now let's look at the estimates. So with regards to the estimates for fiscal year 2023, growth is expected to be 29.57%, fiscal year 2024, another 24%, and then fiscal year 2025, 16.43%. Of course, these numbers will change as more and more earnings reports come out with regards to SoFi, of course. Now, with regards to EPS, right now, consensus here is apparently that still in fiscal year 2024, we are still negative there, 2 cents. And so right now, with regards to the stock, we're pretty close to being overbought. That's what I say. There's a lot of expectations in this stock right now. A lot of the headwinds are turning into a tailwinds. Of course, we also had these comments that, well, there are more and more deposits coming into SoFi. They're still on track. We're still on target to reach that $2 billion in deposits, the same as we've seen last quarter, where they announced it last quarter. So that's always nice to hear. But with regards to the stock itself, of course, we also know that $10 before has been a little bit of a resistance there. This is on the daily chart, by the way. So let's see what we can do this time. There is a little bit of momentum, of course, with the whole stock market. So let's wait and see. Now, last thing with regards to mortgages. So of course, we talked about the debut of SoFi's first mortgage product following the acquisition of Windham. Since then, they have done some various email campaigns and stuff like that. And of course, with rate cuts directly feeding the mortgage demand, macro headwinds turning into tailwinds, etc., the marketing campaigns from SoFi will become more aggressive as they want to grow that part of the business a bit more, since, well, SoFi mortgages is very, very little in the mortgage market right now. Now, of course, this will take some time to become very, very significant towards the overall business, but you'll probably see those numbers jump from growth of 50%, maybe 100% or something like that, but it's still going to be a very, very small part. Now, of course, in the future, this could be a very, very lucrative business for SoFi. And as you can see right here, from Q1 2022 to Q1 2023, the business has diversified quite well, from 2.4 times total financial services to total lending products to 5 times. So yes, they have diversified quite well from being a lending saturated business, or so it was called. Now, let's wait for the next earnings report. I obviously cover this on this channel, so make sure to like and subscribe, leave your comments down below, and as always, I'll see you all in the next one. Bye bye.